Okay, good morning, everyone. Happy Tuesday. Today is June 16th, 2026, and this is the audio addition to the Daily Trade Strategy Brief. NFA Compliance Rule 2-29C subparagraph 1. Past performance not necessarily indicative of future results, but they do rhyme. All right, great. Great to have you with us today. It is a cycle day 2, and as you can see here during the overnight, well, let's just kind of review quickly yesterday. Um, for those that were not with us, obviously we got the Iran gap, and this was cycle day 1. Okay, and TVGR. I haven't used this term in a long time. Richard Boysvit, my partner on the 3-day cycle, he reminded me of this. I haven't used this term for such a long time. Trader Vic gap rule. Anybody familiar with that? Just simply when there's a gap above the prior range. Yeah, when the what's his name? Vic Sperando, I think how's you pronounce his name. Anyways, Trader Vic gap rule, TVGR. Simply when price is clear, uh, when it's a strong gap and price is clear, all overhead resistance or to the downside, either or, and and then the market holds that gap, doesn't even attempt to fill it. All right, you can see here, all right, all the way up. So that's called the Trader Vic gap rule, meaning that if the market's not hasn't, I think it's like a 30-minute period, if I'm not mistaken, if it hasn't attempted to fill the gap um, during like the first 30 minutes, the expectation is for a strong continuation rally. Don't quote me on that. It's been a long time. You may want to look it up. Trader Vic gap rule. 30 minutes is correct. Okay. Yeah, like I said, Richard put that out in his note last night to the email to the subscribers, and I said, "Oh yeah, that's right, Trader Vic. I haven't seen that in a long, long time. I mean, I didn't even think about it yesterday, right? So many of the other things on my mind. All right, so that's the basics of it. Does it help us at the moment? No, it's more of a notation than anything else. All right, but I will say, and we do talk about this, is that when on a cycle day 1, whether it's a gap or not, right? When we have a strong opening on a cycle day 1, okay, and it doesn't come back, it doesn't back and fill in any way. What's the expectation? All right, strong rally, because the normal for a cycle day 1, right, would be some magnitude decline, right? So we got this gap up yesterday, and we really had, I mean, no decline from the gap opening low. All right. So whether it was a trade a Vic gap or a strong opening move, we've seen time and again, cycle day 1, strength, early strength, right? Exactly. So the expectation, right, is higher. So the question becomes, well, how do we trade, or how could we trade, those type of things, right? And hold on just a second. One momento. I just want to check one thing. Yeah, we're good. Okay. Um, so again, just kind of thinking about this for the next time and the next time and the next time beyond that. Um, One way to play, kind of these strong cycle day 1, again, specifically cycle day 1, um, is to either just stay in alignment, long side. I mean, you got to be thinking, okay, strong cycle day 1 opening, not seeing any. I mean, we can use opening range. For that, you get that 5 minute opening range high low, right? Kind of look at that and focus on that in terms of, well, if price doesn't, like yesterday we saw a pullback, and I mentioned this before it happened. We got a pullback to the opening range midpoint, right? I think it was, what did I say, the 25s, 55s, something like that. I forget what it was, 55s maybe. But I said the pullback to the opening range midpoint should hold if this is going to be a continued strong move. Okay, and of course that ultimately unfolded that way. But again, part of our trading, right? We always want to look backwards to find out what has happened, so we can see how things had unfolded in the past. We need to do that. That's part of the learning process, all right? What we want to do is we want to begin to find repeatable type patterns. And then once we're able to do that, we can begin to forward test them in real time. Okay. We want to make some assumptions, right? In trading, there's always assumptions or inferences about what the next potential move may unfold. Okay. Obviously, never a guarantee, but the idea is we need to have some level of assumptions. We need to have some sort of a template, perhaps, to kind of fall back on to use. Okay. Because if you don't know, it's not a matter of knowing or not knowing what's going to happen. It's a matter of being able to identify, various patterns that have unfolded in the past that have played out in a certain way. Again, it's all about, pattern recognition. And so we need to, be able to identify, similar patterns over and over again, right? So that can help us in, making a decision in the real time. All right. Because again, we still need to make some level of an assumption. So if we have a gap up like we had yesterday, okay, and we've seen these on cycle day ones, okay, then, the question becomes, well, what's the play there? I can tell you be long in this case, but I don't want to just tell you be long or just go for a long. I want you to understand, I want you to be thinking about what would be the reasons why, or, how would I play that? What type of structure, what type of trade, all right? So, and if this holds, then that, right? So the old if then else. That's kind of like, given, making some assumptions. Hey, if on a pullback it holds, and then reclaims, opening range high, what are you going to do? Okay, so again, it's always understanding what the next uh you know uh kind of unfolding may happen, and that can help you, get prepared. Okay, so again, something to think about. All right, again, I'm not going to say we should have done this or we should have done that, right? But rather, um, just the idea of, seeing what has happened, and we're going to see it again in the future. We definitely will. When, who knows, but we're definitely going to see that. All right, rolling over into today, cycle day two. You can see the overnight, right? The overnight activity here. The overnight activity here is, normal to a cycle day two rhythm. All right, so we'll just kind of carry that forward, kind of a neutral. And we got the FOMC, first FOMC with new chairman Warsh tomorrow. So I think the market's just going to maybe be in a holding pattern. We still have also contract rollover, and that, of course, may influence, the overall rhythms today. All right. So we'll see how this unfolds for us, and let's make it a good day. All right. All right. Hey, good morning, Mark. All right, let's see how the market, if it's going to be good to us today. Just kind of looking for two-sided rotation, to begin. You know, market's going to dictate how it wants to play for us. Right. All right. All right. So again, looking for kind of two-sided trade action here. Let's just be patient. Um, Again, we'll keep the lean, defaulted to the long side. All right, so default lean for long for now. All right, so again, staying with the default lean to the long side, just looking for pullbacks. We have our overnight, reaction support, again, right around the 20s there, so we can use that. And we'll see, just be patient. That's all. Patience, patience, patience. All right. So what is Warsh going to say on his inaugural speech tomorrow on the session? I'm clueless, but let me bullshit you. Yeah, we'll see. He is supposed to be a dove, right? Or the expectation for him being a dove. So again, it's going to be interesting to see what his first comments will be regarding lowering interest rates in this current environment. So we'll see. Given the deal, he has a bit more dovish room, perhaps. Yeah, with oil, down at what 76 handle, 76 handle, and still kind of looking like it's going to stay there. So yeah, he probably has a little bit more wiggle room, Tom. You're right. I guess they signed the deal electronically, so I guess it is a done deal this time around. So now it becomes compliance, right? At least they did it electronically, but we'll see. In the meantime, back at the ranch, SpaceX is 208 $208. I saw a X post this morning. Uh, SpaceX up 40% in 2 days. Amazon up 40% in 5 years. So obviously, great expectations, right, for SpaceX, given the valuation and so forth. Has nothing to do with the revenues. Yeah, has nothing to do with revenues at this stage. It's all expectations. Did anybody put in for any of the SpaceX on the IPO? I did not. John says, no way. No way. SPX starts trading options tomorrow. That'll drive it even higher. I think there could be some hedging there, though. You know, Could be some hedging there. Yeah. Could be some put buying just to kind of do, kind of lock in, you know, lock in 40% plus or minus, right? I mean, if you can lock 40% in quickly, not too shabby. Yeah, what's the lockup? 70 days? 70-day lockup. So, at some point it'll come down, every rocket comes down, right? Kind of think of it as this, right? Space rocket. Everything will comes back to Earth at some point, so it's all the hype. Let the hype, you know, let it settle down. Yeah. Well, what happens in these IPOs, right? So say you're a big institutional customer, right? And so, you get a certain allocation, you put in, let's just say you put in for, 1 million shares. Okay, use that as an example. You put in for 1 million shares. You don't get 1 million shares. You get 500,000. Okay, or you get 250, right? But you don't get 1 million. You wanted 1 million, but you're not going to get that allocation. So you get, you say you 250, right, or 500. And then so what happens then after that, okay, um, then you get your aftermarket orders that are, let's put it this way. They're not going to twist your arm, meaning the underwriters. The underwriters are not going to twist the arm of an institution, like a big mutual fund, to buy more shares in the aftermarket right after the IPO. They're not going to twist your arm. But let's put it this way, there's an unsaid agreement, okay, that, if you wanted 1 million, we give you 500, you're going to have 500 to buy in the aftermarket. And that's how it works, okay? Um, and that's how it goes, with all the other kind of institutional players. So that way, there's aftermarket or after IPO, right? Once it's priced and it comes to market, that's where you have continued support. They don't want it to break down. That would be a failed IPO. So they keep the IPO, you know, um, aftermarket orders. And now, it's $213 from 135. It opened at what, 150, 151, and there's been a supportive bid, right, all along. And that's the institutional aftermarket orders, okay, that have been supporting it. So the current floor is what? Right? It's the opening price, right? It's the IPO price. So that's the current floor. So everybody knows where so-called support is. Now it's free to move about the cabin on its own. Yeah, so 70 days will bring us out into November. So, I mean, and that's fine. If there's, once the lockup frees up, Heck, I mean, take some money off the table, right? Buy yourself that Lambo for Christmas, if that's what you want. Yeah, I agree. Yeah. Yeah, Dan, post that out in the main room. Dan just posted. He says the average IPO drops 50% in the first year, and even for really good, strong companies. So yeah, I mean, if you want to participate in a good business, if it turns out to be that it's going to be a good business, then you want to buy it you just want to buy it at a more attractive price. Okay, that's all. I mean, you guys know me by now. I don't go chase after hype. You know, it's just not something that I do. I guess I'm more conservative. All right, so just kind of hanging out here. Again, it is still contract rollover, so again, part of that idea there is to keep price relatively stable. Thank you, Dan. All right, relatively stable. All right, so they can effectuate the roll at a more, at a cost-effective way. And of course, remember this week, Friday is closed. It's Juneteenth. Friday is closed, so all the options expiration rolls up to Thursday. So just keep that in mind if you forgot all about Juneteenth. It is off. They closed. I don't know if it's going to be a half day trading on futures. Does it? Cash market's closed. I'm assuming that's probably going to be a half session on futures. Okay, Globex is open till 1 p.m. Okay. I'm gonna take the day. I'm gonna take the full day off. Anytime I can take a Friday off. Any excuse. So we'll take Friday off. Enjoy a long weekend. All right, so again, just kind of staying to the long side here. Again, we got a discount running at the moment, not nearing. We need a little bit more of a pop for a trade out of that. On the opening range world here, just pull in opening range chart for a sec. Again, crude oil, all right, gap open down, long first targets out, stops in place, and NQ triggered long. ES appears to be uh, waiting for its trigger. All right, so that's on the opening range sequence. That's on another screen, so just push that over. So far, roughly first 20 minutes. Again, just kind of continuation from overnight activity or lack thereof. Normal cycle day two rhythms, right? MATD or market or morning after trend day. And certainly yesterday was a strong trend day up. What's interesting is I posted this yesterday. You know how we're always trying to find, you know, where the highs and lows and whatnot are, right? We're always trying to find out like key reference levels. So let me move this over. So here is the profile chart that I use, right? This is the Smash Lido one, all right? And one of the things that I noted yesterday in real time, it was around 12 o'clock. Let's see, 12:40, I think it was on the in the chat. You can check the actual time, but what I noticed up here, you know, as price kept going higher and higher, you know, at some point it's going to kind of stall. We talked about the in real time. We talked about the point of control shift. Okay, that kind of helps identify, you know, when sellers are starting to enter the market a bit more, you know, responsively, not responsibly, responsively. Maybe they are responsible, but anyways, what's interesting though is, you know, like you know, kind of you always ask, you know, I know everybody likes to ask a question, well, why there or why this or you know, well, like I said, I'm not really that interested in the actual whys per se, but you know, what we do like to look for is the what's, right? So using the question what, not why. So what key reference, right, can we identify? Okay. Now this is where the Smash Lido profile really, I love it. Really helps. And again, if you have Sierra chart and you don't have the Smash Lido profile, I do highly recommend it. I don't know what he charges. It's negligible. Go on his website, Smash Lido. I think it's smashlido.com. Um, he does a great job. I mean, I could never create this profile in a gazillion years. All right, and I wouldn't even attempt to. But it's and that's why again, if others have created tools that are very useful, I'm more than happy to direct everybody to, you know, those type of tools that I know that I can't create. So, um, but he does a great job. And what I like about this is, you know, the various labels. Okay, weekly low, weekly value low here. But what was it? You know, value, weekly value high. I mean, these are things that, again, you know, unless you're super looking for them, thinking about them, you know, and so forth, it's just more likely not going to happen. Though the labels here are already designated, and so, you know, again, the analysis becomes, and I trying to identify key references becomes so much easier. And don't we all want easier tools to use, right? Anyways, that said, around 12:40 yesterday, I noted that there's a potential for a high to be in place, right, around the 78, 48s, 50s, or 76 rather, 78, 76, 48, 50s, plus or minus, right? And you know, why that level, right, versus anything else? Well, The why in this case was I noted, again, using his chart here, that it was the monthly value area high. Okay. Monthly value area high. So again, a key reference ID, identification level. Doesn't mean it's going to stop there, but again, would it make sense, some sort of sense, logical sense to stop there? I would assume yes. I would make that assumption. Don't know if it's going to, but again, having the knowledge of, some key reference in that area, I can assure you the big institutions do. They do. And so, you know, so what we do there is when we, kind of identify a level or a zone and we make a note of it, and then we see as the market is unfolding in real time, hey, the buyers have kind of stopped there, right? Sellers look like they're starting to filter in. Now I can make an assumption that maybe the high is more likely in place, don't want to be long anymore, or don't want to be playing long any longer, up near those price points, right? Obviously somebody is. Then you start, okay, well, I'm gonna start start looking for pullback opportunities, either pullbacks for longs or shifting for shorts. Everybody get the idea, right? So again, using these kind of, particularly when the market kind of rallies like this, or breaks down versus the opposite side, and it exceeds all kind of normalized levels that we've been looking for. Okay. um that's the idea. When the POC moves up or down, can you please explain what that means again? So the concept of the point of control is the highest accepted price, both buyers and sellers. That's where the greatest amount of volume literally has occurred. Okay. Now again, the price isn't going to stay there. It's going to move around that area. It's a fulcrum. Think about it as a fulcrum, right? Center point, balancing point. Okay. So, as prices are moving higher, okay, you know, it's eventually going to generate. So if there's little volume on the way up, right, at some point the market is going to respond to those advertised prices. In other words, when buyers are bidding it up, they're advertising that they want to buy, right? They're trying to find supply. So at some point, sellers, holders of they're going to come in and say, okay, I want to start selling those. Okay, and so the volume starts picking up more so than it already had, at that point. So, but the buyers, as soon as sellers show up, the buyers, I can assure you, don't run away. They just don't run away. Maybe a retail trader say, "Ooh, there's a seller there. I don't want to buy anymore." You know, that person as a retail trader is very well, is not experienced in much of anything when it comes to trading. Like, "Oh, as soon as I see sellers, I'm going to stop," or, "Oh, as soon as I see sellers, I'm going to short them." All right? No. Uh, the real players, they're trying to find supply. When they do find some supply, they're going to sit there and buy them as the supply, you know, increases, okay? Because they have a buy order or buy orders collectively. So what happens is the volume starts picking up, okay? And then that highest point of control that may have been lower, okay, now shifts, okay? So a shift in the point of control, in this case upwards, okay, is suggesting that sellers now have entered the marketplace. All right, buyers are responding, buyers are still buying them, but sellers have entered the marketplace. And so the volume begins to get increase, and then you have a large, a new point of control that shifts higher. So that's the implications when the POC shifts. Okay, the implication is in this case from yesterday, as I was mentioning, that the sellers have now entered the marketplace. And so the assumption there is the price push that brought it to that level is more likely to slow down, all right? Not be as, aggressive to the upside. Why? Because now sellers are finally entering into the marketplace. So the buyers don't have to be aggressive as they were trying to push it higher to find where sellers are. Make sense? All right. You can Google stuff like that too, be honest with you. I mean, I'll give you the explanation, but there's a lot of free stuff about profiles and so forth, all right? But that's basically the kind of the gist of it, all right? And again, that can help make decisions on how you want to handle, what you're looking for, you know. And again, what you don't want to do is you don't want to just run away because the sellers enter the market. You just say, "Oh, I don't want to be aggressive buyer. I'll be a buyer a bit lower." So that was the idea from yesterday where we saw, the pullback to let me just bring up the 5 minute chart from yesterday. This was the idea over here in the 5 minute chart where we had the opening up, all right, and then, you know, we had a pullback. We don't want to go chase after that. We want to wait for a pullback. Okay. So again, this was the early play. It was a little bit different than I'm just talking about, but this was the early play. But up to this point, there wasn't a lot of volume. Even on this drive up here, there wasn't a lot of volume. Ultimately this volume filled in, but there wasn't a lot of volume. And then on the shorter term, again, it kind of started building out some volume, right? And then it kind of, the buyer stalled, it pulled back again, right? So even on this pullback, what happened? There were more buyers still. Buyers buy the pullback. But on that next move up, it generated a lower high. So, buyers are there, but they weren't as aggressive anymore, and sellers started filling them in. So this is kind of this is just it's always going to be a process. It's never in, one event, one bar, one 5 minute bar, or one 60-minute bar. It's going to take some time, all right, for the market to filter the buyers, the sellers, fill in the volume, right? So. This is all part of thinking like a big institutional trader, even though we don't trade that size. We want to think, you know, you know, it, it's like think about here's the visualization. All right. When I say think like an institutional trader, right? You've seen kind of pictures of this where you have a little um, call it a house cat, okay, a little house cat, and then what's he thinking? He's a big lion, right? Even though he's small, he's still in the cat family. He's small, but he's really thinking like a lion, right? So the same thing with us, we're kind of that small cat thinking like we're the lion. So we're a small, individual retail type trader, but we want to think about how the institutions, what are they more likely to do, all right, and so forth. So we want to think big, act big, but of course we're not going to be as big. So we always want to kind of have that in mind, you know. All right. So if we're A10 here is on deck around 76.20 21s. Let's see if that can hold. Again, that is down towards the right there, the value low, developing value low right there at 21. So that would be a potential good spot. It just skimmed it, and then we got a bounce. Wish it had gone a little bit deeper, but it looks like it just skimmed it and then bounce. So hopefully, if we get another shot at that, it'll still be there. VWAP now is kind of moved to the 25s, 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 26s. Um, so those 2021s should still offer some buying opportunity if it gets there on the dip. All right, that's a skinny. Okay. Boy, my charts are running so much smoother than they were last week. I found out what that issue was. It had something to do with the profile of the NQ. I think it was the number bars, the order flow that was just bogging things down. But things are nice and smooth now. All right, so got to pull back to, I guess, around 22s, 21 and 3/4 on the tick. I know we would have never gotten that. 22s, just at the top edge, just right at the top edge of that A10. Again, we wouldn't have gotten that. Had the right idea, just didn't get deep enough into the A10 zone. So we'll see if we can get another shot at that. Ah, that would have been a good one, huh? Damn. So close, yet so far. They're afraid of us. They're afraid of us. SpaceX shares jump 10%, set to take over Amazon in market value. To the moon. Well, it's not even to the moon anymore now, right? It's to the Mars. To Mars and beyond. All right, so it looks like we have, we can outline our sandbox pretty well here at this stage. All right, call it the 20s, right? 20s, 30s, perhaps, you can plus or minus, right? So, right, 76, 20, 76, 30, plus or minus, but we at 76s, yeah, okay. You got to keep looking at the big price, I was writing the daily trade strategy the other day, and I was like, I was still writing 75s, and then it wasn't too long ago I was writing 73s. All right. So again, I guess the theme of the day is, all right, stability, shock absorbers, the daily trade strategy, on cycle day two references the way it's written, uh, is kind of references a cycle day two, as shock absorbers, if there's any down move, which there really hasn't been, but shock absorbers from any up or down. So just looking for stability, and it looks like that is what we're getting at the moment. All right, we'll see if we get another shot at this A10. Is this technically the second touch? Well, it never really touched the A10, so technically it would, if it touches A10, it would still be the first touch, though it just skimmed the upper edge of the threshold zone. So hopefully they decide not to, hopefully they don't decide to blast through it and they give us another shot. Second bite at the apple, perhaps, right? For all you attorneys out there, all you lawyers out there, second bite at the apple. Yep. All right, let's see what happens here. All right, can we get the A10? Hopefully they don't blast through us. There's buyers still here looking to buy the dip. Where are those SpaceX buyers? Got to bring in the SpaceX buyers into the S&P. Come on, you mofos. Look at that. And we need those SpaceX buyers. See, this is what I was saying. Okay, this is what I was saying. You know, that that first touch or nearing first touch, that's still your best. Although it did, technically it didn't actually hit it. It is, to me, it's close enough. Then you get, you know, then you get the second rotation, and now it's not going to work. Rat bastards. Rat bastards they are, aren't they? This will only go to continue to prove first touches are the best touch. And if you have any doubt whatsoever, use this as your example. Urgh. All right. It's only one trade, but nonetheless frustrating anyways. Look at that. Right down to 1375. Oh, pricks. All right. Well, it looks like we have a shift ongoing at this stage, right? Again, prices below the opening range, right? So let's make a note of that. All right, so with price below the opening range, again, we see the shift. We'll just kind of just with it. All right, back tests to 24, 25s, 35s, right? 24, excuse me, 25s, call it 25s, 30s, 35s, again, if it gets back up there. All right, but we'll shift to the lean to the sell side now. And that break of the A10, that would have been a darn good trade if we hit it on that first back test. That would have carried to the targets, but that's not what happened. Yes, that was the first pullback on this shift. All right, is everybody kind of following the script? Why we're shifting to the sell side, etc. All right, all right. I mean, we're in this up move, right? Put in a high, put in a slightly higher high, and then just kind of stalled out, right? And then this dip here tested this pivot here. That was where the 810 would have been on the other one, right? And then we got a little zigzag bounce right up here, which again stalled against kind of this high. All right, so that's why that would have been, that 810 would have been the good long there. But once that didn't transpire, right? Again, things shifted here, right? Where my little marker? This shifted here, and then that's why when this broke, all right, that's why that was the way I'm reading that one. That was technically the second touch. I mean, that was really the second touch, but the algorithm doesn't, read it that way. So on that shift, right, lower, then this became the first. This was what Ram was asking, right, at 1026. So that became the first. I don't know about Head and Shoulders, John. Uh, you know, I don't know. What you can see from yesterday's, and I know this is hindsight, but it's good to just reference, right? So this was RTH yesterday, right? So one of the things you want to ask yourself, right, is where did it shift yesterday? Where did it shift? The where, right? So there's your pivot there, right? It broke down through that pivot, right? And then what did it do? Came back up and tested that, right? So that's the law of alternating pivots. That's what I refer to it as, right? Law of alternating pivots. And then if you carry that forward, remember you need to carry this stuff forward. If you carry that forward, again, look where it's kind of stalling out this morning. Is that coincidence? Is that coincidence? You make the call on that one. What I want to get across to you is to be mindful of looking at where prices changed, where there was a character change. And the only way to do that is to go look back and say, again, just identifying a pivot there, a pivot there, right? And then carry that forward. And then, a lot of times you'll see these things just unfold this way, okay? And it's easy to see after the fact, is it not? Everybody raise their hands. So bloody easy to see after the fact, right? Wow, yeah, I can see it now. Yeah, after the fact. Again, I point this out because I want you to continue to be, you know, aware. In other words, asking yourself, looking back, where did things change? Where was there a pivot high, a pivot low? All right. Do I have the zigzag on here? Let's put the zigzag on here. All right. So I've just put a zigzag on there. So zigzags can help you if you having a difficult time visualizing where where the pivot levels are. Using a zigzag. Yeah, zigzags are awesome. I mean, again, you can adjust them to to your size of what you want to look at, right? So I think mine is defaulted to reversal amount 5, right? 5 points. So if I want to say like 8 points, right? Change that. See how it changes the zigzag, right? So you can make it, you know, um, as sensitive if you want. I typically use like 5/8, right, and then either 10 or like 13, but 8 is a good kind of a compromise, right? So it doesn't get a size 8 doesn't get too noisy, right? And it really just identifies, the key pivots, okay? So if you're not using zigzags, my friends, you ought to, right? Again, it's not about, picking that lower high. It's about being able to identify it, because if you're identifying this area here, okay, if you're identifying this is, like identifying this zone right here, right, from yesterday, this is where the trades get set up, all right? It's not in this pivot or that pivot. It's reading the market like, hey, there was a pivot low, pivot high. Okay, this is the law of alternating pivots. Carry that forward. Where would that, if market, opened here or drove up to this level, where could it find resistance, if you want to use that term, or sell response? Where would it find it? Where, not will it, where? Okay, that's how you get your answers. That's how you read the market. That's how you make assumptions and inferences. Okay, that's the work. Capiche? All right. I know you all understand. Right? It just sometimes we just kind of forget, you know. Yeah. Yeah, if you want it exactly at like say 8 or 10, what you want to do is just go a tick higher or lower. So if you want a pure 8 or a pure 10, go 8 1/4 or 10 1/4. It's not going to change anything on the chart, but it'll make sure that you have a pure 10 point move or a pure 8 point move, or whatever value you're using, right, for that pivot high, pivot low. All right. Let's see if the 810 on the short side uh, plays out. Yeah, very nice, John. Very nice. Well played. Well played, John. All right, guys, I want to talk about something. If you got a moment, does anybody have a moment to talk about something? All right, I think it'd be very helpful here. All right, one thing that I want to kind of just note. All right, I was talking with Nicholas last night. Nicholas, are you in the room? Nick in the room? Nicholas may not be in the room. I'm not sure if he is, but everybody else have their ears on for a moment. Okay, thanks. All right, great. So many of you have heard me say time and again about when prices, move higher or move lower. Okay, that let me just change this. Right, that where the last buyer bought or the last seller sold. Hold on a second. Let me just reset my pen for a moment. All right, so where the last buyer bought and the last seller sold, okay? And what does that kind of imply, right? That a potential reversal at that point may unfold, okay? So for those of you who have Sierra chart, all right, now NinjaTrader also has the bid-ask volume ratio. I created one. It's just very, very intensive calculations because it uses tick data here. Okay, this is Nicholas. Nicholas is there. I was talking to Nicholas last night about this, so I wanted to bring it to everybody's attention. All right, and so using Sierra chart, if you have Sierra, the bid-ask volume ratio that we display here, uh, again, it's not just to have a nice little oscillator there, but it's there to get some use out of it, right? And what's the use out of it for this, right? So if you see a directional move unfolding, right? So you see all this red, you know, okay, this what this means, number one is sellers are aggressive, right? Sellers are aggressive. So let's use this as an example, right? So sell, you know, breaks down here, you can see the selling getting pretty aggressive, okay? What we're looking for in a case like this is when market retraces back up. And we're looking for, in this case, kind of a premium type trade, right? Everybody should know that by now, but that's what we're looking for. The question, of course, is at what point, right, does it change that we can, like, the risk is potentially, right, lowest. Okay, the risk is potentially lowest. Now, again, we can look at this, and let me just zoom in a little bit here on this example, right? And again, keep in mind the idea of where the last buyer bought, okay, in this case. So we get this move down, and then we're starting to get this move back up, okay? Now we can identify, you know, the fair value zone here and the ATR, and that's all well and good, right? What you also have, but let's focus on the bid-ask volume ratio for a moment, okay? And so again, this is an average, right? A 13 average of all these bars, right? Okay, so instead of looking at order flow, the numbers and so forth, right? The actual trades, times and sales, I'm looking for the bid-ask volume ratio. So when it's greater than zero, right, there are buyers, right? Less than zero, when it crosses less than zero, right? Again, the sell side is, think about it as dominant, okay? All right, the sell side is dominant. Okay, so what we're looking for here is after a period of a sell down, right? At some point, the selling starts dissipating. Price still may go down, but the selling at these progressively lower prices, okay, becomes less and less. The intensity of it, okay? The intensity. Now, what we're really still looking for is when prices bounce back up and then reverse back down, okay? We're trying to identify that point. So we can use price, we can use the ATRs, we can use the fair value zone, always to kind of like identify a zone, an area potentially that the market could stop and reverse. Is everybody tracking so far? This is going to be today's lesson, right? As we get near to the end of the recap. All right. Okay. Now using the bid-ask volume ratio, right? What does this tell us? If these are buyers, right, where it's greater than the zero line on average, right? If these are where the buyers are, or what's happening underneath the surface, if that's where the buyers are, how can we read this, right? How can we read this? The buyers, this is where the last buyer bought. that peak, okay? At that peak, this is where the last buyer bought. This is kind of important, right? That's where the last buyer bought, right at that peak. So if we're looking to sell, when do we want to sell? Okay, when the last buyer bought, right? Or indication of when the last buyer bought. An indication of when the last buyer bought. We don't know where that's going to be exactly, but that's what we're looking for. So when we kind of look at these peaks, remember, we're looking for a sell, right? Yeah, at or near. Steve got it right. Steve 9, right? So at or near. So what we want to do is we want to identify, be watching that where those peaks are. And when that oscillator turns back down, so let me put a vertical line here. Where's the vertical? So we're going to do a vertical line here. So this is where the peak was, right here, right? Okay, so that's the peak. What we then want to do is identify, okay, when that shifted, when the peak happened, and then when it started moving back down. So when it starts crossing that zero line again, by the way, this is going to be fairly fast, fairly quick when it happens, because it's a 750 tick, right? But this is what you want to be thinking about going forward, right? If you see where the peak is and you're kind of anticipating it's going to be around that ATR, remember, this is the idea of kind of thinking just a few steps ahead. If you're identifying at or near to the ATR, we're also looking at the peak. Now, it could also produce a premium here on the oscillator, right, on the CCI, but I want to focus in on the bid-ask volume ratio, because this is order flow. It's not just price representation. This is the order flow. All right. So when the order flow completes, the buyers are complete, they're done, right? So sellers are going to start coming back. That's where we want to be looking to take action when this thing crosses. And when that crosses, it's going to be crossing somewhere, a little bit lower off that peak. I'm not trying to get the peak. I'm trying to sell it or enter off the peak, right? And how would we do that? Right side pivot, okay, type of play. Yes, okay, right side pivot. But what I want to bring to your attention is the idea of where the last buyer bought, okay? And you can start using these peaks. So see this move up here, right? This is where the last buyer bought. Now we don't have an ATR there, all right? We don't really have a reference there necessarily, right? Like we do on an ATR, right? But what we do have is, a peak in the buying. So this is where the last buyer, LBB, last buyer bought, right? That peak, right? So if we can identify that and start seeing this side as it's unfolding, which is essentially the right-hand side. But when we start seeing that, and then we see this cross right here, again, when you're putting this stuff together, all right, look where the potential entry could be, right in here, not at the peak, coming off the peak. So if you're thinking about, hey, this is rallied up, it's kind of stall, if you look over here and you say, hey, there was a prior pivot, right? It could stall at that pivot. It could, not will, but it could. All right. I'm going to be sitting up in my seat. I'm going to be looking very closely at how that bid-ask volume ratio, okay? Yeah, I know. We have that as well. I can show that. Okay. So there you go. You can use the bid-ask volume ratio as an identifier of how far or where the last buyer or where the last seller sold on that move. Does that make sense to everybody? Is it clear? Take a look at this one down here. These are the sellers, right? Look at the peak right? Look at the peak there. So you want to kind of, you can compare peaks and so forth, or troughs in this case, but you want to see where the last seller sold, because once this starts moving back up, price is going to start moving back up because the buyers are stepping in, right? So this could be a way of identifying, like, look at this peak right here, a little baby peak, right? I mean, you can clearly see that there was not a lot of buying effort there, but it did get above the zero line, all right? It works, it can work with premiums and discounts, it can work virtually anywhere, okay? It can work anywhere. Remember, I'm not getting rid of I'm not getting rid of premiums and discounts. What I'm saying is an added, if you want to think about order flow, right? Do you want to use this for order flow, or do you want to use this over here for order flow, right? What do you want to use for order flow? Do you want to use the number bars? That takes an enormous amount of skill to read and understand to make a decision. It's not going to happen. I'm going to tell you right now, it's very difficult. Okay. Using the bid ask volume ratio, again, this is on Sierra. We do have a version in NinjaTrader. All right. But you want to be thinking about where the last buyer bought, where the last seller sold. This is the concept about this, right? And this will tell you, right? And again, you can go back and take a look at the peaks, right? There's the peak there, right? There's another peak there. There's another peak there, right? I mean, you can literally go to all the peaks and troughs, right? You can kind of think of these as pivot highs and pivot lows. Now, in this case, over here in the middle, we got a break, right? We got a break. So we're getting an acceleration. So I'm not buying this down here. I'm looking for the retracement back up. All right. So now I'm looking for where the buyer, the buyers, in other words, here what happened is this, right? The sellers got aggressive, and then the sellers started slowing down, or they were getting absorbed by the buyers as price was going down. They were getting absorbed. So there was less and less selling pressure. Think about the bid ask volume ratio as buying and selling pressure. Where did that pressure finally stop? Again, where did the last buyer bought? Where did the last seller sell? The pressure stopped. Okay? And then when it stops, it reverses because there's no more pressure, right? So the idea is the pressure shifts back to the up or to the down, the opposite side. So if we're identifying a down move, we're looking for premiums, we're looking for bounces. I'm looking for where the last buyer bought. So if that oscillator, that bid ask volume ratio gets above zero, or maybe it doesn't get above zero, but I'm looking for a move above zero, and I'm just looking for. I mean, you got to be paying attention to this, right? You got to be looking for it. If it's on your screen, if you have a bid ask volume ratio on your screen and you're not using it, take it off, because it's useless to be there because you're not using it. But if you want to use it and you have it on your screen, this is the explanation. This is the kind of identification, right, that you can use, all right, to help do this, all right. That help a little bit. We also have it configured where if we take the trender off, okay, I have it configured in this particular one where I can I can make it the color bar as well. I can make it a color bar as well. All right. So now this is very helpful if you make it as a color bar. So look at the color bar, right? It's going to match exactly, okay, where it changes. So the color bars here are all white or grayish, right? So what does this mean? This is mean the bid ask volume ratio was above the zero line, right? You can see where that finally peaked and it shifted right there. See where the bars went red? That's the shift right there at the zero line. How's that for a visual? Okay, that's an awesome visual. All right. So all you want to do is just make the bid ask volume ratio as a color bar. Okay, which is, it should be configured in there. It's easy to do. If you don't, all right, I'll help anybody that needs me. Now, again, remember how you want to use this. All right, you don't want to use this at every juncture, right? You know, red, red, white, red, white, red, white, whatever. You're not trying to use this at every juncture, right? You want to use it at specific times and points where the market has some, has some movement and range, right? Or a directional move, and you're getting a retracement, and they can help you, you know, because let me ask a general question. Where do your eyes focus on? Where do your eyes focus on? Price, right? Price. You're not looking at oscillators. You can reference them, but generally when you're in a trade, where are you looking, or you're looking to put a trade on? You're looking at price. Okay, this is something that why I have stars, text, arrows, and in this case a color bar. Because if you're looking at price and you see everything, and you're seeing these white bars right in here, well, that's telling me that we're above the zero line, right? But I'm not looking at it as a buy. I'm looking at I'm reading it as buyers are pushing it up. But when those buyers stop, when the last buyer bought and it turns back down, code red, okay, and that's shifting back below the zero line there. That means the sellers are now regained control of that. Make sense? All right, so you want to use these at particular junctions, not all over the place. You know, when it gets like this action right in here, where we're white, red, white, red, white, red, you stay away. That's not the area that you want to play. Right? You want good, clean moves. You can do your measured moves. You can do your Fibonacci moves. You can do all that stuff. Okay? D-level money box moves. I mean, it's just a number of different things that you can, like here in this area here. This is just another example. Look at all the whites and the reds and the whites and the reds, right? All in here. To me, I'm not touching this. So don't go white, red, long, short, long, short. It's not to be used that way. It's to be used to say, well, the buyers here are pushing it up, right? Now they've taken control. Okay. All right. At some point, it's going to peak out, right? So this one peaked, you know, but there was still some residual momentum in price. It hasn't turned red yet, has it? Right? No. And it pulled back, but it's still, there was so much buying pressure here that the buyers were still there. It took a while for them to dissipate. Now, when it shifted back here, well, we're really back to VWAP. So am I shorting this? Nope. Okay. So you got to learn to make some decisions on this, but I wanted to bring it to your attention. And the concept here is very simple. It's very straightforward, right? Is that where did the last buyer bought? Where did the last seller sell? And how can I use that, right? With this, right? So just as another example here, we, predominantly selling pressure, right? But there's your buying peak. There's your buying peak. There's your buying peak. There's your buying peak. But we're in a down directional lean, all right? So we're looking for buying peaks. So when that stops, right? That's where we want to enter. And if you kind of think about this, right? If you focus on the right side pivot rule concept, you're going to be directly in alignment with what the bid ask volume ratio is going to show you. All right. It's very hard to get the actual peak. right? And this is, again, I don't even try to. But what you're looking for is if the market's moving, lower, you want to look for the buying peaks. And let's see if I can grab one from yesterday on the upside. All right. So let's just use this kind of move in here just as example to a couple examples here, right? And we'll finish this off. So we obviously have upward, momentum, right? And so it kind of peaks and then kind of comes back down. Very lame, not a lot of selling there, not really any strong selling, but nonetheless, there was some, a little bit of selling in this area here, right? So you can see that on the oscillator on the color bar, right? Even in this situation, if you waited for the shift back, where are you buying them? You're buying them here somewhere. What is that? My friends, it's the right side pivot rule. But now, not only is the right side pivot rule, okay, now you have the support of buyers underneath, all right, to help you. Yeah, let me just show you the settings. Ram, take a look at your take a look at your 750 tick. If you have the DMI ratio, you may have another one right next to it. Okay, check that first. But if you don't, all right, what I'll do here is give you the settings. No, I'm sorry, I'm sorry, not the DMI ratio. My bad. Sorry about that. Bid-ask volume ratio, right? The bid-ask volume ratio. I confuse those in a second. The bid-ask volume ratio. You should have two of them. If you don't have two of them and you only have the oscillator, it's the same settings, right? So let me just take a snapshot of them and I'll give it to you in the room here. Okay, so here are the settings, snapshot settings of the bid-ask volume ratio for a color bar. Okay, that should help everybody. Again, that has Sierra chart. If you have NinjaTrader, we do have it. It's just it's a resource hog because it takes tick data and again, it's it's a heavy load on NinjaTrader. So I don't really like to use it on NinjaTrader. I thought it would be lighter, but we can't get it any lighter. But here's a good example again, just on the buy side, right? Buyers, 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 right? We got some selling that came in this vicinity. Okay, a little bit of a pullback. It's below the zero line. That's not a short, mind you. That's not a short because there's some sellers. It's a pullback. We're looking for when the pullback ends. This is the kind of the key. When do I buy it? What tools can I use to help me enter the trade, to have greater confidence that the sellers are done? Well, when the buyers come back is the answer, right? And when do the buyers come back? When that bid-ask volume ratio, in this case, turns white. You can make it whatever color you want, green if you want, if that's kind of helps you, visually. All right, but that's when the buyers are coming back. And since it's an average of 13 bars, okay, because it's an average, I know it's a smoother signal. It's a more well-defined signal. It's not just one big price point. It's an average of price points. Okay. So that's what makes it even stronger for a use. This is where I want to buy it when the buyers come back. When do I want to short it? After the buyers have done buying it and the sellers are coming back. Okay. That should make very good sense to everybody. So check that out. Um, of course, make a note of this today, June 16th. If you want to go back and watch the video recap, we're going to end that here at about 2 hours. All right. But I thought this was, I had a conversation with Nicholas last night. Nicholas uh, got some of our software after his trial, and we were talking about this. So I thought this would be a good topic as well, um, to, for the group. Okay. What could be helpful for the group. Now, again, the bottom line is, we're looking for, peaks and troughs. Okay. And again, this is based upon, right, bid ask volume ratio, which is very good, right? So this would be one final example, and I'll end it here. I promise, right? But you can see in this whole area here, there was a fair amount of sellers, right? How do we know that? Well, look at the bid-ask volume ratio. Fair amount of, persistent sellers on average, right? And then we got a little pop in price. Okay, got a little pop in price. Well, if we looked over here, where were the previous highs? So we can kind of carry that forward, right? So, and we have an A4, right, bear condition here. But again, I'm not talking about the A4. But what we're saying here is all this selling, right, move this price down, and then we got kind of this bounce, right, this leg right here. This got a bounce. Well, where's the peak of the bounce? Where did the last buyer buy? Okay, at that peak, right? Clearly identified. But we're not going to sell it at that peak. Very, very rare you're going to be able to get that. We want to do it when it crosses back down. So we're going to start doing it when it starts turning red again. Okay? This area here, right in here. Then your stop will go above the high. Okay? And this kind of helps you, gives you some level of assurance, not a guarantee, but some level of assurance that you're entering on the same side of whomever is dominant at that moment in time. I always talk about want to stay in alignment with the dominant force, where the last buyer bought, where the last seller sold. Okay. To me, this is a very practical way of using it, and actually you're using order flow as part of this, because this is representative of order flow. The CCI is representative of price, which is great, but this is the order flow. All right. All right. So hope this is helpful. Again, make a note of this if you want to review this on the recap. All right, recording. And with that, I will end our session today. And we'll be back same time, same back channel tomorrow morning. So have a great rest of your day, everyone, and keep managing your risk.